had a slightly different career from what most of you would probably be looking to do in finance. So I was at UCL uni. I joined the military, the Navy, and it was about the year 2004, something like that. So it had been quite an interesting time. I had no interest in finance, none whatsoever. I would never have been in a finance society, anything like that. But obviously that changed. So I got in, later on, and I left the Navy when I was about 30 years old. So I did 10 years in the Navy, and I then did an MBA. I did that at London Business School. And it was whilst I was there, actually, I had the chance to talk to lots of different people from all sorts of backgrounds, be it consulting, entrepreneurship, industry, and banking. And I really, got to understand each sector. I was making this big transition, and I really focused in on finance and banking as something I was interested in. I worked quite hard, and I can tell you about what I did and how I did it if any of you are interested later. But I got an internship at Goldman Sachs, and I then joined Goldman Sachs as soon as I left that. And I was there for a few years before I left, and I'm now at a company called Rathbones, which is an investment management company, but sort of UK based with the completely UK staff, no international or very little international. So if it's okay, Ferguson, if this is useful, what I would like to have heard when I was where you are, I was hoping to just break down in simple terms the different industries within banking. What are the pros and cons of some of them? How do they really differ? What's the inside scoop on what makes them unique? And maybe a little bit about where they're going. So some of them are rising, some of them are sort of, they're not growing at the moment. And that might give you an insight into aligning yourself with one of those. So of course, the sort of golden thing that everyone looks at is investment banking. Everyone wants the investment banking job at the big American international firms. So investment banking is basically deal making. So company A wants to buy company B, and it's everything that surrounds that is to do with investment banking. So you've got company A who want to buy company B. So company B are trying to make themselves out as best as possible, aren't they? They're saying, we are the best company in the world. You definitely want to buy us. We've got great profit coming up. What a fantastic strategy we've got. What a great management team. They're giving all those messages because they're trying to get as high a price as possible. The company buying them saying, well, we like you, but there's big problems. We need to sort out a lot, spend a lot of money. Your profit projections, they're a bit rich. I think we need to lower them. They're trying to get as good a deal as they can. Now, the question then comes, why does each company want to do it? Well, generally, companies that go through M&A, mergers and acquisitions, are public companies. They're not really held by an individual or something. They're generally big companies. So why do they want to happen? Well, of course, they're owned by shareholders. So in the company that's being bought, shareholders generally like it, because the share price goes up because company A has to pay a premium to buy it. If you want to buy a restaurant, you're going to have to pay a premium for that restaurant because it's already up and running. So shareholders there like it. Why do these shareholders like it? Well, they don't always like it. Sometimes share prices go down after acquisition, but really they like it because they think that that company in the long term will add even greater profits to them in the future. So you get the bankers who are doing a lot of modeling as to what they think the price should be, because that's what they're trying to get to at the end of the day, is what's the price. So you've got this set of bankers who are making it as good as possible, this set of bankers who are being as conservative as possible. And that's investment banking. So it's all about free cash flows, profit analysis, everything to do with that. You've got the lawyers, they're going to have teams of lawyers on either side trying to make the deal happen, get the contracts ready. There's generally, these are big deals that happen. These are multi-billion-dollar deals or even more than that. And they're going to need funding for that. So you've got a whole sort of area of finance around lending to M&A and to do with financing M&A deals. So you've really got the whole you've got the whole sort of the whole group. You've got loads of different things that are around this M&A deal taking place. And of course, it's deal making. So really try and understand the structure of deal making. So if you, Fergus, were an investment banker at, let's pick a company, at Goldman Sachs, and Amy, you're an investment banker at JP Morgan, and you're working on either side of this M&A trade. You guys are each working for the companies, your banks, but the banks are being employed by these two individual companies. So they are going to work you hard. They are going to have you running long hours getting these figures right on either side. They're going to be pushing you. Your life is going to be, 16 hours or whatever it is in the office. They're going to push you to be doing this because it's deal making. As soon as you get to something that's deal making, it puts the pressure on either side. And so you've got to be prepared for that if that's something you are interested in joining. Another part of the bank that you will have heard about, you think of all the computer screens, the lots of different phones, is the trading desk. And what does the trading desk do? Well, they literally trade anything that is tradable on the open market. So the most common ones would be equities, the shares, bonds, and commodities. So those would be all those. Some people specialize in a geography as opposed to those, or a currency. You can do a lot of currency trading. And then you get right the way down into, third grade platinum traders and things like that, who are specialists in different types of things. Trading is quite an interesting area because it's gone through so much change in the last sort of 20 years. If you think about deal making is still deal making, isn't it? M&A is always going to be M&A. It's going to be the same thing and people trying to do the same thing. Trading actually is not. Trading is not. Trading's different. Trading has gone through a massive automation, and that's completely changed what the trading floor looks and feels like. And the third thing I wanted to talk to you about as an industry in finance that I think you should be thinking about is investment management. And that really falls into two sectors. One is the sort of private investment management where they deal with individuals, and the other is institutional, where you deal with pensions and institutions, basically. Now, investment management tends to be longer term. It's about, asset allocation. Amy, Fergus, when you have your SIP, you have your ISAs when you're a bit older. You can either manage them yourself, they might be managed through a company, or you can get a manager to do it. And that would be an investment manager, a private banker. On the institutional side, you would have read as you come across the FT and other things like that, things like the, the university lecturers fund, and, there's some strikes, aren't there, planned by lecturers and things like that. And that's all to do with their pensions. That's on the institutional side, and that's called asset management. The asset management deals with large institutions, and private wealth deals with individuals within those. So those are the two parts of investment management. And by the way, I'm on that side. I am an investment manager, deals with private individuals. That's my background. So I wasn't investment banking, wasn't trading. I was an investment manager dealing with private individuals. So I thought I'd talk about the sort of pros and cons of each and where I think they're going. And then I'll sort of pause there for a bit of a break, and maybe then we can go on to recruitment, some tips. I did a lot of recruiting in my time at Goldman and things like that. So I can help you with that if that's of interest. So look, investment banking, it is a massive revenue earner for these large banks. Because it's such a revenue earner, frankly, that's where the big salaries are. That's where the biggest bonuses will be paid in a bank. But it's where sort of the most unstable lifestyle will be. So you've got your brother's wedding on the weekend, but that's also the weekend when the big deal's happening. I'm sorry, the bank will sit and make a very quick judgment to which of those is more important, and it won't be in your favor. But investment banking, it's really interesting. I think it's a huge industry. It always will be a big industry because there are always companies that want to run takeovers and to do buyouts and things like that. It's always big. It's quite cyclical. So if you are looking for recruitment at a time when the taps are turned on, you know, they'll be employing 20, 30, 50, 100 people at a time. If you're, when the taps are off, i.e. they haven't got any deals coming through, the market's in a bit of a slump, no one's buying and selling, it'll be down to 2 or 3 people. It's quite cyclical in its nature. But that also offers opportunities, of course, because if you don't get it first time, maybe that'll change a bit later on. So that's investment banking. I've got a lot of good friends in investment banking, and they enjoy it. Trading is what I think is probably the hardest thing to do, and it's the one that, you know, all the pictures of people with lots of telephones and that, it's the one people think about when they think of finance, who don't know anything about finance. But actually so much is automated now, and it continues to be automated even more. I mean, back in my day, I know that makes me sound really old. I'm not that old, but, you know, if you wanted to, I don't know, buy, you know, if you're an oil company and you wanted to buy some oil futures, you would ring someone up and discuss the deal and do the deal with a trader. Now, most of that will be automated. You know, you're online, if you want to buy or sell shares, you can do it through your account. You don't need to talk to anyone. And that's quite new. So it's seen a big change in that. But trading, if you're still interested in trading after all that, it is a good job. You just got to understand it's something that is viciously competitive in not a shrinking market. The market's growing, but the role of the individual trader is, I think, a bit more limited than it was. Investment management is my field. This is where I think it's good. There'll always be a role for investment management. People are getting wealthy around the world. Institutions are getting wealthy around the world. You know, $1 billion in investment management terms used to be considered a big figure. Now it's sort of a run-of-the-mill figure, you know, because there's so much money being generated and it all needs managing. So if you become an investment manager, it's all about the management of money. If you're on the institutional side, it's the asset allocation, everything. If you're on the private side, it's that side, but it's also the relationship part. And that's where you get that sort of, you're having to actually speak with clients, which I find a compelling place to be. I mean, I was on a pitch this morning and, you know, we didn't know much about them, but they were a very wealthy family and we were pitching to manage their assets. And so it's fun. You go into these meetings and you don't know what they're going to be like, and it could go one way, it could go another. And that's a really fun part of the job. So I hope that gives you a sense of the industry. I don't know, Fergus, Amy, do you want me to cover anything else? I don't know whether like hedge funds or private equity or anything, but does that give you an idea of the different industries and where they're going?
Yeah, absolutely. Yeah, hedge funds and private equity could probably add something to the sort of idea of what the landscape is in finance.
Okay, so hedge funds they're basically special vehicles that can do a lot more. So a hedge fund traditionally, the reason they hedge is because they can go long and they can go short. So long means you're buying the market. You're buying in an upward trending market. Short means you're betting things are going to go down effectively. And what hedge funds do is they can, you know, I mean, there are about 1,000 different types of hedge funds, and many things get called hedge funds that aren't. But traditionally, what they try and do is where the likes of us, the investment managers, we are long. We're generally long only. We buy stocks we like. We hold stocks we like. We hope the price goes up over time and the dividends are collected that pay for things on the way. That's how investment managers work. Hedge funds, they trade their market. They say there's an event coming up that's going to do this, therefore we're going to trade this. Or they might say, they might be a technical hedge fund. They might say, well, look, the graphs are telling us there's going to be a breakout to this side or that side. Or they might take a macroeconomic view and say, well, look what's happening in the world, in this part of the world or this part of the world. therefore it's going to affect the price of rubber or whatever it is. They can, hedge funds, they generally are quite specialized. They're not the sort of things where they're a general hedge fund and do a little bit of everything. That's not how hedge funds work. They generally have a very specific purpose and way that they do things. So in terms of any of you listening to this call, if you have a particular interest in a field, it's always worth just finding out if there are any hedge funds that are in that field as well, because they would be interested to speak to you. They're always looking for people who are interested in what they do. Private equity and venture capital, I'm going to lump them together because they pretty much do the same thing, which is, they buy shares that aren't yet listed on the stock exchange. So if Fergus and Amy go away and they form let's say a pencil making company together, and you're the shareholders, and you start to grow, but you now need to build a factory because you're producing a lot of pencils. You haven't got the money for that. How do you do that? Well, the first thing you're probably going to go to is an angel investor. Think of Dragon's Den, where people say, okay, I'll give you £100,000 to build your factory, but I'm going to want 30% of the company or whatever it is. That sort of way of doing things. So there's angel investors. One step up from that is where you find the VCs and the private equity, which is where they are specialist companies who buy equity that's, as I say, not listed on the stock exchange. So you're now producing a couple of million pencils a year. Your profits are a few million a year. Bang, private equity would love to speak to you. Private equity tend to, the smaller ones, I mean, you wouldn't find deals less than maybe 5 million. That's probably the lower end. Up to, let's say, 100, 200 million would be the top end of private equity. And that's what they do. Your pencil company is now producing millions of pencils a year, billions of pencils a year. It's making huge profits. That's when it gets listed on a stock exchange. And then it's open to all investors of all sizes and shapes. So private equity and VCs that's where they come into it. I think, private equity especially has seen a massive, 20 years ago, it was tiny, now it's huge. If I could rewind, that would be something I would really consider going into as a career, because the opportunities for private equity, if they can spot a company that's being run reasonably well, and they can buy it for what seems like a very high price for the individual selling it. These people might make, Amy and Fergus, you might make £20 million from the sale of your pencil company, which seems like a massive sum of money for you personally. For a private equity company, they're just going to spend that. They're going to bring in a professional team, or they'll use you, either one, and they'll try and grow that. They'll take it to new markets. They'll make it far more productive. They'll cut costs. They'll do all these things, and they'll make it hugely profitable, and then they'll sell it on. And they generally have about an 8 to 10 year cycle in private equity where they raise a fund. That's what you'll hear that term. They raise a fund. So, let's say I'm a private equity firm, Oliver's fifth fund. So Oliver's fifth fund is now open to investors. People can give me money. They give me money. As soon as I've raised enough, I then start the clock, and I generally have about 10 years when I have to pay those people back. So I spend the first couple of years looking for companies. I buy those companies. I grow those companies over 4 or 5 years, and I then start selling those companies on to other people. And that's the sort of process of private equity. So you can imagine in that, there's loads of roles that gives you if you're interested in private equity, from the deal making, from being on the professional team who improve the companies, from being, the huge numbers of lawyers. It's a real sort of lawyer and accountant heavy part of finance. So there are lots of private equity lawyers and things like that. And so that sums up private equity, but that's a really interesting part of finance as well.
That sounds very interesting. I guess what we could do, if you've got maybe like 10, 20 minutes to talk about the interview sort of stuff, we could have a break here. If anyone's got any sort of questions they want to ask now, we could do that.
Yeah.
So yeah, if
So
you've got any questions, either put it in the main chat, send me a question privately, or just put your speaker on. But I guess in the meantime, or if we're waiting for anyone to ask a question, I've got one, and I'm kind of interested. You obviously in the military, and then decided to move into finance, and you went and got an MBA. How did like the decision process of getting the MBA and then moving to Goldman? How did you decide to firstly go for the MBA, and then what skills did the MBA allow or give you that allows you to then move sort of quite seamlessly into Goldman and to finance generally?
yeah, so there are two things. I mean, the reason I did the MBA was because I just didn't know what I wanted to do when I left the military. I knew I wanted to do something in sort of the private sector, not the public sector anymore. I felt that I'd exhausted that. And I just sort of thought, I need to move into something else. I've done my time's up really. What the MBA does, which I'm a big advocate of it, is that it focuses, I would say, less on theory, and they use what's called case studies to examine things. So let's say, I did one of the best courses I did on the MBA was on pricing policy. So it's about how do goods and services get priced. If you're pricing a service, how do you price it? What are people sensitive to? And it took away all the sort of, preconceptions I had about pricing and things like that. So it was really good, but it wasn't taught in a mathematical way. There was some math. It is quite intensive, but it's not all maths. Most of it was done through case studies of, they give you situations and you talk through situations, and these are generally situations that have happened. And so you then investigated to find out, well, what actually did happen in real life. And I found that really compelling because I remember the cases specifically, and they really helped me to think about things. And that's across. And you don't go into any particular area in great depth, so you're not going to become a pricing expert, but you dip your toe into just every single part of finance and business management, really, literally everything. So I thought it was quite useful to do for someone who wasn't from a business background or from a finance background. It really made sense. But more importantly, it gave me the chance to just talk to people, Fergus, and, what do you think of this job? And people, it was terrible. You should never do it. People are quite open and honest with each other. So it gives you that chance as well.
Yeah, no. I've had a question sent to me, and it's, what's the best way to break into a hedge fund in the UK? If you're able to shed any light on that sort of topic.
Yeah, good question. Well, should we move on to recruiting generally? Because I think that's it's always quite an interesting part. So I did some recruiting at Goldman. I couldn't get a job for love nor money when I first started looking at the industry. Far too much competition. I got into Goldman, which is something in itself, and I can tell you about the process a little bit. And as soon as I left Goldman, I had people knocking my door down trying to meet with me. It's a funny old world about what happens in it. And I was only a few years further on, wasn't that much more knowledgeable than I was before. But that's the way it is. Look, for you guys leaving, I think you need, my advice is to do the maths around it. So look, your investment, how many people from Birmingham Uni are going to be applying to any one of the 5 things I've spoken about? Probably 1,000 people a year.
Easily, yeah.
Easily 1,000. How many unis are there in the UK? Let's say 100. So immediately that's 100,000 people. Now that's very rough math. It's obviously not going to be correct, but it gives you an idea that there are a large number of people applying for actually quite limited number of spaces. And if it's in a good year, there might be, 5,000 spaces in finance. If there's a bad year, it might be 2,000 spaces, something like that. But it will change by year. And it literally does. These big companies, they turn the taps on and off really quickly because they need to, and because they have to react to the market cycles. So my advice to you is make yourself stand out. I was really taken by some of the stories about how people manage to find jobs, from, people, literally standing in London with a street with a board that says, here's my CV, I'd love to hand it to you, I'd love to have a chat. If you're just going to go through the mainstream process the whole time, i.e. you're going to join an investment society, you're going to go to talks whenever you can go to talks, you're going to try and connect with people on, let's say, LinkedIn, and you're then going to apply for graduate jobs from it. You're doing what everyone else is doing. So you're going to get the results that everyone else gets as well. You're just hoping that you're slightly better than other people. And that's tough, because actually, when I was at Goldman and they would say, right, Ollie, we need to recruit 5 interns this year, and we've got, 1,000 applicants. That would be a pretty typical sort of ratio. You get handed a stack of CVs. And I'm not joking. We had a yes pile and a no pile. This is just at the CV stage. And we would spend about 10 seconds on a CV before it goes in each pile. So they're literally going boom, 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 like that. And then it gets done again from the no pile of all that, then goes to yes pile. We do it again, bang, 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 bang. We do it again, bang, 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 and get it down to a smaller pile. And we then think about the interview stage.
And so what sort of like immediate things are you looking for on a CV? Is it like the formatting, the font, or what sort of specific things are you
don't underestimate that stuff.
Yeah.
First of all, it should never be more than 1 side in length.
Mm-hmm.
And people really struggle with that, but it must not be more than 1 side in length. It's got to look attractive. It's got to look easy to read. And I always think you've got to start with the most interesting stuff and work your way down. So frankly, maybe if you're president or running the investment club, that's great. But, went to a talk at the investment conference is just wasted space, wasted words that would immediately get me to the no column. Actually, what I'm interested in generally is you as a person. Look, Fergus, if I'm going to recruit you, I'm going to have to sit next to you for 12 hours a day, 5 or 6 days a week. I want to know that you can do the job, that you're going to be effective at doing that job, and that the last point, I'm going to actually like you. And I think that's what people forget in the process, is that third bit. They work so hard in making themselves appear that they're skillful, that they know finance, everything else. Actually, one of the things I would always look for, generally people would split their CV in 3. The first bit would be about education. Second would be about their, their job experiences, etc. The third bit was always like personal interests. And I remember one CV I read said something like, enjoys sport, charities, and all those sorts of things. Just complete disregard to that. You don't need to hear about that. You're a banker. You want to hear about my finance, don't you? That was the sort of message. I mean, the most diabolical, that if I could have burnt that, I would have burnt it. It was so bad. That was so quickly on the no pile. Actually, the education piece, I generally know you're all at universities. So that was, tiny bit. Yes, few A's, great. A bit of work experience is going to be interesting to see what you've done, but that's probably, I'm going to glance at that for about 5 seconds. And then the final bit is looking at you, your interests, and that's probably going to get the longest look, because I want to get a sense of who you are. So I can tell you what they told me when I was applying at Goldman, and sort of insider told me, is that what they're looking for is excellence. So if you say you like tennis, they don't just want to know that you like tennis. They want to know that you've entered competitions and won a competition. Or if you like climbing, you've climbed the 7 peaks of Europe, or whatever it is, or, whatever your interest is, you take it seriously and you try and excel in that field. And that's really important, because it sort of connects the dots in my mind that this is someone who, they have an interest. And frankly, I don't care whether it's, underwater basket weaving, whatever the heck it is, it doesn't really matter. but that you've taken it seriously, you've improved yourself, you've been competitive. Banking is competitive, so we're looking for that competition, not just enjoys it socially. That's not really, oh, okay, fine, great. We're looking for that edge, and actually I'm a national champion at whatever it is, or I've represented my uni, or I've captained the team, or I've done something along those lines, or, that's just sport. It can be a charity. I helped found a charity, or I've dedicated 15 hours a week, every week of my life to this charity, or, it's got to show excellence and it's got to show commitment. And if it doesn't quite come across like that, and you see people trying to sort of come across like that, but they haven't really got the minerals to back it up, it comes across like really easily. Does that help on the sort of CV side at all?
Yeah, sure. I can definitely sort of, that makes a lot of sense. I've had another question.
Sorry, one thing on CVs as well, is get the terminology right. So Goldman, JP Morgan, Credit Suisse, UBS, whatever hedge fund it is, whatever private equity firm it is, they refer to the positions differently. So some will have it as an associate, some will have it as a minor partner, some will have it as a, and the number of times as well, I was recruiting at Goldman, someone would say, the reason I want to join Credit Suisse is because of, blah, 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 blah. And when I say the number, I'm talking 20, 30%. Because people are applying. Obviously, I know you're applying to 8 companies. But if you haven't gone through each one with a fine tooth comb to make sure that it's addressed to the right company, they're using the same terms that the company use, which you can find on the website. If you're not doing that, then you're not someone that is attention to detail that's going to be good at the job. So it's a really big indicator there. Can I address the hedge fund point, Fergus? Is that?
Yeah.
Hedge funds are really tough to get into straight away. I'm going to be honest with you, because actually, what can a hedge fund do with a 21-year-old maths grad or history grad or whatever it is you're doing? It's tougher for them. What hedge funds tend to do is take people once they've had a tiny bit of exposure to something that they're interested in. So if, I don't know, if you went on to joined a bank and you joined investment banking and you were in the oil department, you were doing deals in the oil industry, suddenly you're attractive to a hedge fund because you are now an oil specialist who's doing deals in oil, aren't you? Or if you're a trader, they're suddenly interested to a hedge fund. If you're at the moment, I do a lot of client development work. So I'm bringing in new clients to the company. So I might be interesting to a hedge fund who are trying to grow and bring in new funding. So hedge funds tend to have very specific requirements in specific fields. And in my view, I haven't touched the hedge fund world that much, so I'm sorry to whoever answered. I can't give you a really detailed answer, but there aren't that many hedge funds that need people at the 20 or 21-year-old level. Generally, they're looking for people who have a skill that they require at that time. And then they'll go out and get the best people in that field to do it. So if you want to go to hedge funds, my advice is become a specialist at something else first, and then look to move into that.
Yeah, I suppose there's also like the cost that the hedge fund has to invest in sort of, getting a grad up to speed or to make them actually useful.
And hedge funds, they want to make money immediately.
Yeah, straight away, yeah. Someone else has asked what your MBA program was on again, and I guess that's sort of trying to get a bit more out of what exactly you did in your MBA.
Yeah, so MBAs are general. MBAs are not specialist areas. So you don't do an MBA in accounting or an MBA in finance or an MBA in marketing. You touch on about 10 different things. And they're from quite soft skills, like, because you have people leaving MBAs going into HR departments. So there'll be things around psychology, around group, think about all things right there. right through to people who want to go into investment banking that are heavily focused around finance. You've got marketing, you've got everything in between. So MBAs there, mine was 2 years in length, full-time MBA. But there are, MBAs that you can do online. There are MBAs that take a year. I think the Oxford and Cambridge ones take a year at their business schools. But the idea is that you touch on everything, but you're not going to specialize in anything at that point. And that, for me, was fantastic because it gave me that ability to just dip my toe into everything and understand where I wanted to be at the end of it.
Yeah. And this was at LBS, was it? In
Yeah.
London? Yeah.
Yeah.
And did it have opportunities to, well, obviously it was broad in scope, but were there sort of electives that made you sort of push down a specific path or not?
Yeah, so funnily enough, I didn't do much of the finance stuff while I was there because I figured that I would do a lot of that when I joined Goldman. I did a lot in entrepreneurship and I did a lot in marketing. I just enjoyed those areas. I happened to find them really interesting. And it's paid dividends for me because now in my role, I'm sort of in a team and we're bringing in new clients. So it involves marketing. It involves a lot of the softer stuff. Because I think maybe the error that people make who want to go into finance, the people who want to go into finance, they tend to focus on all the finance electives, and that's a big mistake. Do you want to mute whoever that is? So
yeah. I was just about to say, I think it was Eric. Do you mind just muting yourself?
Okay. Eric, naughty Eric. And then, so that, I think if you want to go into finance personally, and this is at MBA level, by the way, if you want to go into finance, focus on some non-finance things, because that's what's going to set you apart once you get into finance. Being good at Excel or being great at maths formulas or something. If you're good at that anyway, you're good at that anyway. You don't need to be even better. You're going from like 95% to 98%. Great. What would be far more useful is being a complete novice at marketing and moving up to being 80% at marketing. That's of real value to where you want to join. Would it just a few minutes on the sort of, so I've done CVs, but maybe a bit more about the application process and the interview process?
Yeah, sure.
So look, interviewing is interesting. I didn't leave it to chance like a lot of people do. If you just, as I say before, if you just go through the standard process of, you applied by the deadline on the university login page where you do your application to all these different banks, you then wait for the thing. If you do that, the results you're going to get, it's very hard to stand out from that because, they're looking at so many thousands of applicants. I made a much more concerted effort to do it differently. So I met someone at Goldman at a conference or something. I said, look, do you mind if I stay in touch, gently in touch? I promise I won't pester you. Can I buy you a coffee and just find out a bit more about the industry? And they said yes. And I turned up and I had I'd printed out like a little agenda of what I wanted to talk about. And I said, look, thank you so much for giving me the time. I don't want to waste your time. So I've sort of got some things I'd love to cover. If there's anything else you think I need to know about, that would be great. But, is that okay? And they're like, oh, brilliant. Fine. Okay. Yeah. Well, what have you got to tell us? The number of sort of coffee chats you go to where the person hasn't really spent any time preparing, it's actually a negative. You're then going to go back to the office and go, well, that was a waste of time. We won't employ that person. So I did that. I made a real effort. And what I did that actually stood out that people spoke to me about afterwards, years later, that helped was every time I met someone, I wrote them a handwritten thank you note. And I always did it the same day and posted it the same day. So generally they would get it the next day. So I'd meet them on, I don't know, Monday, 10 a.m. outside the office, have a cup of chat with them, have the agenda, be really sort of polite, be very sort of thinking about the industry. I'd done a lot of research, and I would always ask them, look, thank you so much. I'm looking to find out more. Is there anyone else I should speak to? And generally, if you've had a good time with them, they'll pass you on to 2 or 3 other people. And then that night or that afternoon, I'd go back, I'd write a handwritten thank you note. I'd put it in the post. So they would get it the Tuesday morning. And it's like a spider's web. It just grows. It's like compound interest. It just grows massively the more you do it, to the point where by the time I got to the interview process at most of these banks, and I did it for all the banks, I knew a lot of the people I was meeting. I wasn't meeting them for the first time. Now that took an extraordinary effort to get that right and to do it. And I made loads of mistakes along the way. I had some terrible coffee chats where I didn't prepare. I had some real shockers, but I got the formula right in the end. And that's just an example of one way you can do it differently. But that's my message to you, is do it differently. If you just do the same thing as everyone else, you're going to have the same results as everyone else, which is 1 in 100 people get through. Sorry, I don't know if that's useful or not.
Yeah,
but
that's incredibly useful. So,
yeah.
I guess was this during your time at LBS doing the MBA? Were you just sort of attending conferences and some organically meeting people?
Yeah, and the worst thing you can do is you'd had it at your uni when you get like, I don't know, Goldman or JP Morgan or UBS come in for their day and they present, don't they? And they've got like a dozen bankers with them, and they get surrounded by the group of grads who are like looking to speak to them, all trying to get in and ask them a question, things like that. That's not really the time or the place to make an impression. You can't really. What you need to do is just find out any way you can get through to people in these companies. So it might be, for example, going on the University of Birmingham alum page and finding someone who works at Credit Suisse and getting in touch with them. If you write them an email and they don't respond, if you connect with them on LinkedIn but they don't respond, why not try writing type up a letter quickly and send it to their address, their Credit Suisse address, whatever address it is, and tell them you're going to call in a couple of days and hope that's okay, and then give them a call. Do what you have to do to break in, because once you've broken in, you can then use all sorts of ways to increase your networking within that. But I just can't stress enough, if you go in cold thinking, well, I've worked really hard at my degree, I think I'm a great candidate for them, you're just like everybody else.
Yeah, no, that makes so much sense. I guess I haven't had any more questions, but I've got quite a specific and maybe odd question. But you know how in the application process, obviously you fill in the automated portal with all your grades and such, and you put your CV, and then quite often they ask you for a cover letter.
Yeah.
What do you look for in the way that's sort of set out? Who do you how do you address it? Do you address it sort of like, dear recruitment team, or do you think of someone that's specifically in HR, or do you just leave it blank, or do you say dear Goldman, or how do you sort of phrase
Dear Goldman.
Yeah, exactly.
Dear Birmingham.
Yes.
I like that. I can't remember, to be honest, Fergus. I've got on my computer somewhere. I might be able to bring it up. Maybe I can share screen or something of some I did. Let me just get to one that I did. Oh God, this is going back a long way. So first of all, they're really essential. You've got to come across in a lot of different ways that might seem contradictory. So you've got to be humble, but you've got to show your best self. You've got to be competitive, but at the same time show teamwork and that sort of thing. It's got to be about you, but it can't be about you. It's got to be about them as well. So there's a lot of contradictory things you've got to get. I did what most of you will do, which is I found a sort of a template that worked for me. And when I mean template, I made up the template. I didn't sort of look it up online or anything. I I wrote loads of iterations myself until I was absolutely happy with it. And then, obviously then amended it slightly for stuff. Here we go. Should I show you a cover letter? Hold on, it's just coming up. So I applied to, when I was at LBS, I applied a lot to consultancies. I applied a lot to consultancies because I was thinking that consultancies where I wanted to be. It turned out I did a consultancy internship, didn't enjoy consulting at all, management consulting, didn't enjoy it at all. So moved away from that, moved to somewhere else. But they've got a really sort of interesting process, very formal. I always addressed it to whoever the sort of head recruiter was. So I would, generally at whichever bank it is you're looking to go to, or whichever thing is, you can look up either online who the UK head of recruiting is or something like that, and address it to that person at that address. And what I'll do is if you once you stop recording, Fergus, I'll share just with the people on this call, the letter, and you can see it on the screen and see what you think of it and things like that. So yeah. But yeah, I remember that sort of process and stuff. But by the way, if you do the networking right, Fergus, you've met the recruiters, you've had a coffee with the recruiters. And by the way, so the first application, what's going to happen is it's going to go first of all to the HR department, and they're going to do a filter. It's then going to go to the bankers, who are going to do a CV filter. It's then going to go to the interview process, where there's another filter. It's going to go through all these levels of filters. So as you do your networking, don't just focus on one group. Focus on, meet lots of people from HR, and have relevant questions to put in there. A question there from Ethan: how come you didn't enjoy management consultancy? I think this is not a sort of an assassination on management consultancy. I think they do a fantastic job. I didn't like the idea of constantly helping other companies come up with strategies and then not implementing it. So if I were to, let's say Birmingham Uni wanted to change all their academic programs and all that, they might bring in a management consultancy, and the management consultancy would design it all. They would do the structure, they would do everything around that, and then they would leave, and it would be up to the team in Birmingham to actually implement it and do it. I sort of wanted to do that bit. So the strategy bit didn't really get it for me. But some people absolutely love that. You do 6 to 8 weeks on a job. You can be anywhere if you're based in London, you can be anywhere in Europe. It can be in a telecoms company, one job. The next one could be at a university. It's totally, so it's actually great. If you're interested in business generally, management consultancy is fantastic, which is why so many management consultants go on to be top CEOs, CFOs, found their own businesses, because they have that experience. But it just, you know what, Ethan, sometimes you just do something and it's just not for you. It's as simple as that. And you can't, there's only so long you can force something on yourself that you don't really enjoy. So yeah, hope that answers that.
Yeah, lovely. We've had another question, and I guess it's slightly cheeky. It's asking if you meet someone at a company and they're interested in hiring you, is there the possibility of sort of bypassing the application process, the formal application process?
Not at big companies. Yes, at small companies. I mean, I think there's a statistic that something like 60% of hirings are never ever advertised, which is to your point that, a lot of the time it's just done internally, or it's just done with a group of people that they know. It's done through a headhunter or a recruitment company. But the recruitment company say straight away, we know exactly who you need for that job. We've just spoken to them last week, and it gets in like that. So yeah, it's difficult, but the the big companies, the Goldmans, the UBSs, the big banks you're looking at, the big private equity firms, no, you have to go through the process. What you can do, which is what I did, was I did so much networking that I maximized my chances at each step. But that's not to say I couldn't have fallen down at each step if I had a bad day. But you just maximize your chances by getting to know people. I've had a question from Eric Fergus, which is quite a good one. Can you get a full-time IB offer if you don't have summer internship IB experience? I think it's tough. And actually what I know that a couple of my friends did who didn't have IB experience, they had to do an IB intern when they were sort of finishing uni, do the internship, and then try and sort of get in that year. If they couldn't, they went and did something else for a year before they then took up their position. So they did it out of kilter. 99% of people they take will have, I don't know the exact timings for it, but let's say it's a 3-year degree. People who have done their internship in the second year will then go and work full-time when they leave after the third year. That will be like 99% of people. It's very rare that they go outside of that. And the reason is, however good you are, there are so many people applying for these internships. It's much easier for them to pick people who are in sync. But I'm not trying to put you off on that. It's just a bit of reality there.
Yeah, sure. We've had another question, and it's, how do you prepare for technical interviews and applications when you're from a non-technical undergrad background and without an MBA?
Yeah, so, I mean, look, I did a degree in anthropology. I knew nothing about any numbers at all. I then was in the Navy for 10 years. And within 18 months, I was at Goldman. So I was not a technical person to whoever was answering that. I was, there were people who were wanting the Goldman job who'd done, 6 years investment banking and 2 years in a hedge fund. Were trying to get the same job. And I think it comes to that point where I raise those 3 things, that they want to know you've got the intelligence to do the job, that you're going to be good at the job, but they actually like you and they like who you are. Now, look, if you're on an MBA program, if you have a good degree from a good uni, like you all do, frankly, that answers the first 2 questions. This isn't rocket science banking. They know that you can do the job then. So then it actually moves quite quickly to the other stuff. Do they sound like, just on paper, they like you? Have you met with people? Do you sound like the sort of person that you want to sit next to for long periods of time? So I hope that answers that. It's a bit of a tricky one, but it's sort of it's just as simple as that. Yeah. I've had another question here, Fergus. Can I read it out? Sorry. Yeah. So when you were networking people in those banks, did you ask for references, or did you just make sure they remembered you in order for your application to stand out? I guess my question is, where do you draw the line when networking? That's a good question. So what made the difference for me? And networking, by the way, is really important. And generally networking in banking is done through this idea of a coffee chat, which is where you ask someone formally for, like, look, can I go and buy you a coffee for 20 minutes and talk with you? And generally, they'll say yes. Sometimes they might be too busy and they say come back later, in which case you do come back later because they mean it. Everyone in banking wants a good flow of people coming through. So they're always willing to do it. But it means a variety of things. The first error I made, the first one I went to, I just wasn't prepared. I didn't know the industry. I was like, oh, this is great. Thank you for meeting me. Can you tell me more? And they're like, more about what? Exactly. And I just wasn't there. It was a disaster that. I remember it, like, it was last about 5 minutes, the whole thing. It was, you don't want to repeat that. So you've got to have done your research. I used to, as I say, I sort of had a printed out agenda. I mean, I'm not talking, this thing wasn't like War and Peace. It was just a few bullet points of things that I wanted to learn about them. I generally will have known, if you were having a coffee chat with me, Fergus, I would expect you to have looked up that I worked in this sector for this company and I did this job, and asked me specific questions about that. and then maybe say, look, I do have a couple of general questions about the industry, but I'm meeting with you. I can ask those to anybody. What would really be valuable to me would to be explored to how you got into your position, or, that then suddenly people are interested because you're asking something really specific. And then to Bogdan, who asked the question about how people remember you. No, you don't ask them for references. The way I did it was I wrote these letters. I wrote little handwritten letters that were, on with a fountain pen, wet sort of signature pen on really nice paper. That, on a nice sort of card paper thing that I had made up specifically, which all sounds a bit ridiculous now, but it made a massive difference. And actually, when I left, someone left Goldman about 3 years after I got there, and he handed me back the letter that I'd written him 3 years earlier when I had a coffee chat with him. And he said, I liked it so much, I didn't want to throw it away, but I didn't know what to do with it. So it's just been sat in my drawer. So that meant, something that I'd written was in this guy's drawer for 3 years. How brilliant is that? So I would encourage you to don't all go out and copy that method. Think of your own way of making yourself stand out in an appropriate way that means they're going to remember you.
Yeah, it's incredibly powerful, isn't it? The fact that you sort of just have that extra little touch that makes someone or have a physical reminder of your existence in their drawer.
And no one does it anymore, by the way.
No.
You go back to your parents' generation, they all used to do it. Now everyone, people send me bloody LinkedIn messages or something like that. It's just a disaster. It's just not, I might respond, I might not. I probably check LinkedIn once every 2 months or something. We're all busy people. And actually, if you do the normal thing, you're not going to have the sort of best results. You're doing what everyone else is doing, just sending an email or something. It's not really going to make you stand out.
So would you say it's quite important to be proximate to where finance is going on? So being in London and attending these conferences so that you can make that initial connection that then leads to a coffee chat?
Definitely. And it shows you're interested. And when you have a coffee chat, it's a lovely point to start, that, I went to this conference and I also went to this one, and I noticed that they differ in these ways. I was wondering if I could explore that with you and how your job fits into each one, or something like that was a really nice way to do it. But generally, I think you've got to find a more interesting way to connect with people. If someone just out the blue sends me a LinkedIn message, chance of responding are probably less than 1%. If someone finds me in another way, maybe they're an LBS alum, or they find my Rathbones email address or something, and they say, look, I've got this connection with you, whether it's through school and interest or something. I'd love to, I'm in the area next week. Is there any time you can spare for that? That's a much more compelling thing than just a generic sort of way of contacting.